Is Palantir a risky opportunity or the next big success in technology? Welcome to this new analysis, where we'll explore one of the most intriguing questions in the world of technology and investments. Is Palantir about to explode? To answer this question, we'll compare Palantir's performance with one of its main competitors, IBM, focusing particularly on the EPS, earnings per share, of both companies. EPS, earnings per share, is a key financial metric that represents a company's earnings per outstanding share. It is calculated by dividing the company's net income by the number of issued shares. This figure is fundamental because it provides a clear view of a company's profitability relative to the number of shares owned by investors. For investors, EPS is crucial as it reflects a company's ability to generate profits, which directly impacts its stock value. Rising EPS generally indicates that a company is achieving higher earnings, which can translate into an increase in its stock price, making it one of the most closely watched metrics when making investment decisions. Additionally, EPS allows for the comparison of profitability across companies of different sizes or sectors, providing a valuable tool to evaluate their market performance. In this video, we'll analyze how these two companies have evolved over the years, their EPS figures, and the factors that have influenced their price movements. We'll compare their trajectories and discuss what the coming months or years might hold for them. If you're an investor or interested in the tech sector, this analysis will give you a clear insight into the competitiveness of these two giants. On the graph you'll see now, we can observe the evolution of the EPS of IBM and Palantir over the past few years. As you can see, the growth trends of these two companies are very different, although both have experienced highs and lows. IBM, a company with over 100 years of history, has shown a relatively stable growth pattern but with certain fluctuations in its performance, especially as it has had to adapt to the new digital era. In comparison, Palantir, a younger company, has a much more volatile profile but has captured the attention of investors due to its growth potential in big data analytics and artificial intelligence. Founded in 1911, IBM has been a cornerstone of the tech sector for decades. From its beginnings as an office machinery company, it has evolved into a giant in computing, software, and cloud services. However, the past few years have been challenging for the company as it has had to adapt to the shift toward cloud computing, artificial intelligence, and big data, areas where competitors like Amazon, Google, and Microsoft have taken the lead. In terms of EPS, IBM has maintained relatively modest growth in recent years. However, its efforts to reinvent itself, particularly through its investment in hybrid cloud and artificial intelligence, are starting to show results. Recent reports have shown a rebound in profits, generating some optimism among investors. Palantir, founded in 2003, is a much newer company known for its data analytics software for governments and large corporations. Although it has faced criticism for its focus on analyzing confidential data and its ties to government agencies, it has also earned admiration for its ability to process and analyze large volumes of data with great precision. In terms of EPS, Palantir has had a mixed performance. While the company has reported strong revenues in certain quarters, its profitability has been inconsistent. Despite this, the market continues to view Palantir as a company with enormous potential, particularly in sectors like defense and artificial intelligence. As the company expands and diversifies its client base, investors are watching closely for signs that Palantir may be on the verge of sustained profitability. Relevant EPS analysis. As we can see from the graph, IBM's EPS has been more stable compared to Palantir's, but this doesn't necessarily mean IBM is winning the race. Although IBM's EPS has grown slowly, this could be a sign that the company is entering a successful transition phase. IBM has proven to be resilient over the years, even during times of crisis, making it a safer option for conservative investors. On the other hand, Palantir, with its higher volatility in terms of EPS, offers a riskier opportunity but with much greater growth potential. If the coming quarters show that Palantir has improved its profitability, especially by securing more lucrative contracts outside of the government sector, its stock is likely to experience explosive growth. The key will be whether the company can stay on its path to profitability without relying so heavily on government contracts. Several factors have influenced the EPS movements of both companies. For IBM, the transition to cloud computing and artificial intelligence has been crucial. However, the competitive environment, with companies like Amazon Web Services and Microsoft Azure, has affected its ability to lead in these sectors. In Palantir's case, key factors include its focus on high-risk but high-reward sectors such as government and defense. Despite the growing demand for its services, its reliance on a few government contracts has limited its ability to diversify its client base. Looking ahead, experts appear divided. Some believe that Palantir is on the brink of a major breakthrough, particularly with its expansion into sectors beyond government and the growing interest in its AI capabilities. If the company manages to improve its profitability and control costs, we might see a growth explosion similar to other tech companies in their early years. IBM, meanwhile, continues its transition toward becoming a more modern, cloud-focused company. While the changes are slow, projections indicate that the market could reward IBM if it manages to maintain its adaptation pace. In summary, both IBM and Palantir are undergoing transition phases but with very different approaches. IBM has been a stable player in the tech sector, while Palantir is a growing company that could be on the verge of exploding if it overcomes its current challenges. The future of these two companies will largely depend on their ability to adapt to a competitive environment and change their strategies to maximize profitability. For now, investors should weigh Palantir's growth potential against IBM's stability when making decisions. If you found this analysis interesting, don't forget to subscribe for more content on investments and technology. See you in the next video.